in Asia today after a bit of a bounce yesterday. There is a certain amount of optimism that the reopening of Europe and America will, in essence, trump the surge in COVID infections in India and Asia. Let's kick off in India with Narendra Taneja, India's leading energy expert. Narendra, an update from the ground. How substantial does the challenge remain?
Well, you see, we see some light at the end of the tunnel in western part of the country, like in Mumbai, and similarly, we see a lot of hope in New Delhi, which was like epicenter of the second wave of COVID-19. The situation in southern part of the country, like in Bangalore and other areas, is still quite alarming. And we have also seen COVID-19. The second wave is spreading into the hinterlands and the countryside in several parts of the country, more particularly like in Uttar Pradesh and Bengal and Bihar. These are very, highly, densely populated states. So that's a big area of worry. But situation, I said, we see some improvement, rather significant improvement in New Delhi, in Mumbai, and several other parts of the country. But many of these areas still remain, in lockdown, which means that economic activities are limited and people are not allowed to go out and go ahead with the daily economic life. So that's, of course, is still a concern. So we don't know once lockdown is fully lifted and the economic activities are allowed to return to normal, I mean, how, the COVID or the virus is going to behave. We don't know that yet. But we have seen that thanks to lockdown, we have seen significant improvement in many parts of the country.
Why is the country not taking the decision as it did last year to do a national lockdown? Inevitably, we have all of these state lockdowns or different versions of it, and yet we're still at 300,000-400,000 official infections, with certain view that the real number is many multiples of that. Why not a national lockdown, do you think?
Well, very good question. In fact, we did that last time, and the experience and the feedback we received that for a very vast and complex country like India, which is home to 1.38 billion people, that's more than the total population of Africa. And under the Constitution, also with a union of states, just like the US, which means that and health is a state subject. So many states actually, objected to the decision taken by the central government that time. And so based on that, many people wanted to move Supreme Court, that the center can't do it entirely on its own. It has been now left to the states because also experts have suggested the best way to deal with it is to go for the approach which is based on a decentralized model. And we see that if, for instance, in Maharashtra, Mumbai, is doing better than Delhi, that's because of the decentralization. I personally feel that since we are such a complex and vast country, it's better to go for a decentralized approach where the responsibility is shared between the center, but more the states and within the state with various districts and sub-regions and so on and so forth. So I think in a country like India, it's a better approach to go for leave it to the states and then at the same time support the state from the center as strongly as you can.
Let's pop over to London, where Kate, I'm sure, like everyone else, is busily packing their swimming suits and getting ready to fly off to the Falkland Islands for their holidays. Kate Durian, Mies contributing editor and non-resident fellow at the Arab Gulf States Institute in Washington. Kate, are we finally seeing the moment when the rubber meets the road of demand recovery in Europe and the US and will lift oil prices out of the current range that they've been stuck in, held back by such developments as India and elsewhere?
I don't think so. I mean, I don't think we're going to see prices move very far from the current range because of all the uncertainty. I mean, even in the UK, we heard the Prime Minister say that the India variant, which we now have in many parts of the UK, may derail plans to open up in June. Now, yes, there is a bit of movement. I mean, if you talk to people who are planning to travel, they say, you know what, we can't even find a seat between now and November. albeit in business class, because a lot of people don't want to be crammed into crowded planes. But I think if you look at the recent IEA and OPEC monthly reports, they do expect demand to accelerate, demand growth to accelerate in the second half. And they're quite optimistic about India's prospects. You know, they still have Indian economic growth at about 10%. So, you know, the assumption is that India will, the crisis in India will have been brought under control in the second half. And much of it depends on whether you have jet fuel demand increases as people start to travel. If you have, you know, the gasoline season in the United States, which is a traditional barometer of demand. So I think, given that supply is going to start increasing from OPEC from May to July, with the possibility that if it looks quite tight in the second half, as the IEA and OPEC predict that there will be a gap between supply and demand, then you might see a slight movement unless OPEC Plus take action to sort of free up some more oil. If Iran comes back, which is at the moment not looking very likely in the immediate future, and much depends on Libya as well. So you have these two wild cards which may change the supply equation.
Sorry, we got you there. Mike McGlone, sitting in New York, senior commodity strategist with Bloomberg Intelligence. Mike, a few days away from the infamous is it Labor Day weekend that kicks off the summer, or Memorial Day?
Memorial Day.
Memorial Day. I always get those two confused. But nonetheless, the summer season kicks off. The big demand cycle for gasoline. Is that the tangible demand that we've been waiting for that's really going to push this market higher? Your thoughts?
Yeah, I think so. That people are, you know, like, as Kate mentioned, it's harder to hop on an airplane. They're more reluctant to do that. So I do expect that the driving season to kick in and do well. The big difference is I do sense the world changed in 2020, and it's the commuting. Typically, that's the most significant sustainable demand from the U.S. is people who have to drive 50 hours a day, 50 miles a day, and don't care about what it costs. They got to get to work because that's where they make money. That's changed forever, and that's what I think the market in the world is overestimating. Is it's underestimating the fact that the world changed in 2020. So I see it every place I speak to, and just by hearing from my colleagues is. At my office, I mean, everybody I speak to is reluctant to come back, and they found a new way to work now. Even if they do come back, it's maybe 2 days a week. They're not hopping in that car and driving anymore.
Until Mike sends them all an email and say, get your hiney in here by Monday morning at 8 a.m.
But Sean, that's the most profound significant thing he has, and they're not doing it.
Oh,
so,
really?
I mean, I got the message. I've been back.
First, I will not obey Mike's emails.
There was a strong hint.
Oh, and really?
That's where, you know, to me, this is to me, the most important things in markets to assess the human nature. And to me, that's what shifted. And one thing I've heard from a lot of corporate executives is business travel will never come back to where it was before. I mean, I'm going to Miami in a few weeks. And I'm actually going to be moving there. And I can't wait. But hopping on an international plane before you do a Zoom as much as you can for a meeting is not going to happen, because you're going to do the 10 Zoom meetings, and then you're going to, at the last minute, and then you're going to do the business travel and visit clients. So to me, that's changed. And then there's this one, the key thing I look at in the oil market is if I'm bullish commodities, I'm tipping over to metals. I'd be much rather be, and I still think copper is going to continue to outperform crude oil. I look at it, there's so much optimism from reopenings. OPEC supply has to remain disciplined, yet right now they're about 10% of global consumption, which is the highest ever. We have to have that rising stock market tide, and we have to expect a lack of supply elasticity in U.S. shale, which to me is a lot of optimism. So I agree with Kate. I think we're stuck in a range. I agree with the upper end of the range. And all that we need is a little tweak in the stock market, and everything collapses. So it's riding this. I just don't see a solid support below the market, but I do see it in things like copper and metals.
Narendra, the big question from a sort of selfish perspective of international oil markets is how big of a hit to demand is this current equation in India? There's some reporting 20% of Indian oil demand is been cut out in May. That to me seems low, given the state of the challenge in India at the moment. What are your thoughts for the outlook on the impact for Indian oil demand this month and over the coming months?
Well, in some parts of the country, it could be actually more than 20%. I mean, it's not, I don't have any exact data, but my sense is like in some parts, like in northern part of the country, in Maharashtra, it could probably be more than 20%, could be 25 to 27%. Now, that said, at the same time, as Kate said, that, I'm pretty confident. And when you look at the ground realities and the way things are, the kind of aggression that we have seen, approaches and policy initiatives, both of the central government and the state governments, I think things are going to get under control sooner than many people, for instance, are saying in the western part of the world. And,
are we really dealing now, Narendra, in India with essentially a strategy of herd immunity in the absence of any other strategy? We're seeing positive infection rates on those being tested at 20+% of people reporting for a test are proving positive. If that was any way to be a number representing the total population, 1 in 5 people infected, you would essentially be moving to herd immunity.
Well, difficult to say. We have heard this herd immunity theory, but when I look at the ground reality in India, it depends what part of India we're talking about. When you talk of India, it's like talking of the whole of Africa, Algeria and South Africa in the same breath, in the same paragraph. So it's very, very difficult. In some parts, it's less than 10%. Like, for instance, Delhi is now in the region of 10%. And if you look at the numbers from 30,000, every day, it was down to now less than 10,000. We expect it to go down to about 3,000 to 4,000 cases per day very, very soon, and maybe down to 1,000 over the coming 2 to 3 weeks. So it depends from what part of India one is talking about. But that said, at the same time, now we have data that in terms of a kind of setback to economy this time round, the second wave around, is actually much less severe than the first time round. So which means that we'll be able to kind of bounce back and faster than many people think. And my own sense is, for instance, now there's going to be a gradual withdrawal of lockdown in many parts of the country, especially the areas which are critical for the economic growth, like New Delhi region, Bombay, Pune, Bangalore, Mangalore, and Chennai, etc. So, and Hyderabad, Secunderabad. So my sense is that that we will actually recover. In the second half is going to be a good year. And as far as the overall economic projection, GDP projections, yes, there will be a bit of a setback, but I think we will still be looking at the whole year, financial year, which in India ends on March 31st. I think we are going to be more or less as predicted. Maybe a loss of 1.5% and all that. But that said, at the same time, coronavirus we have seen in many parts of the country. We see a world like Japan is struggling. So we really don't know. This virus seems to be very unpredictable. But the kind of vaccination campaign that we have launched, and which is doing very well, and plus we have opened up imports of vaccine from wherever we can find, I'm pretty confident we're going to see significant progress in the direction of getting rid of
on that point, Narendra, I mean, the question for the international energy markets about how much Indian oil demand is going to drop off on the back of this second wave, but perhaps equally as important from the point of view of global economic recovery is India's exportation of vaccines has been such a critical part. India is the biggest producer of vaccines in the world, I believe. Where does that look like it's going now? And will India have to hold back the vaccines that are being produced in India for India?
Well, hold back for the time being. I mean, India is a major exporter of vaccines. And, when you look at the augmentation of vaccine capacity, we will actually need to export in order to make those projects and investments sustainable. So yes, temporary setback, because government has come under criticism that why had you been exporting to other parts of the world when actually vaccines were needed in India. But at the time when we were exporting, India was exporting, that time actually coronavirus looked like that was very much under control. That's why we exported to 70 countries. And well, that was not for money. That was more part of the global diplomacy. As you know, that India and China, others compete all the time. So that's why the total difference. But for the moment, it has been put on hold. But I'm sure that once the situation gets back to normal, then we will start exporting again, because these exports are done by private companies. These are not government of India companies.
Of course, getting back to normal then is the big question. How long does that take? But inevitably, Kate, you mentioned in your earlier comment the outlook for the Iran nuclear talks in Vienna. They're in week 5, I think now. Slowly but surely, it would appear moving towards an outcome of rapprochement. But my question is, how or what is the significance or potential impact of the current tragedy in Palestine, where so many people are getting slaughtered in Gaza? But the challenge of this geopolitical event vis-a-vis the proxies getting sucked into it and possibly destabilizing the Iran rapprochement. How do you see all of that sticking together?
I mean, I don't really think that Iran is the driver, or you know, has so much influence over Hamas. You know, the weapons presumably originate from Iran, but I don't think it wants to rock the boat. I mean, nobody really expects the deal to be concluded. I mean, yes, there has been they are getting closer, but there's still issues that are sticking points. You know, the banking issue, the money laundering, that Iran, and with elections coming up in June, it's a bit difficult to see that between now and June 18th, when the Iranians have their election, their presidential election, that you will have resolved all these differences. But I don't think they want to rock the boat. I don't think it's going to sort of become an issue, because at the end of the day, the talks are focused on the nuclear deal. They're not really looking at Iran's missile program or its involvement in regional affairs. So I think that's a separate issue.
Well, it would be complicated. I mean, I think if we're seeing a bit of skirmishes on the Lebanese border, if Hezbollah was sucked in, I think personally there would be problems. That it would be uncontrollable to see where the chips might fall on that, but we'll have to wait and see. Mike, the momentum of the oil markets ultimately had been driven, like most other markets, by financial investors. There's been a certain amount of profit taking on the oil recovery in recent weeks, which some analysts are saying are putting a cap on the oil price getting much higher. Your thoughts on that open interest and the sort of wider participation of the funds?
It's not that extreme, Sean. I checked it before I wrote to my Outlook last month and before we got on this morning. And what's really inching up towards the extreme is commercial hedging, which you'd expect as they look out in the curve and say, hey, I can make money here. My average price last year was, 2019 was $10 below here. I can lock in and make money. So I think that's what I expected. But as far as the managed money, hedge funds, they're not that extreme to really make a difference. And they bumped up to the upper end of the range, but they're still, I think, part of the driver. But I'm thinking the smart commodity investors are more going to the metals, and that makes sense the way we see it trading. For instance, one example today is copper's up over 1% and WTI is up half or less than 0.5%. So it's just not that extreme at these levels. Although, and I think it's more what I've seen, from Kate says, I think we're just kind of locked in this range, and people get it in crude oil. You look 10 years ahead, 5 years ahead, there's just a lot of demand for metals. There just isn't for petroleum.
I enjoyed reading, Mike, your Bloomberg intelligence report that we posted on the Daily Digest today. Is the bell ringing for an end to the commodity rally? Your thoughts on that, your sort of bullet points, maybe you could share with us your thinking there?
Yes, there's so much dependence on things continuing to do what they have been in this very unique aberration in history. And that to me is the problem. One of the biggest issues with commodities in history of mankind, certainly the last 10 years, is elasticity of supply. So key thing is crude oil. I see WTI, crude oil, and Brent near the upper end of the range. And what's happening at these as we get to these levels? Incentive for more supply is kicking in, and demand elasticity doesn't matter much anymore. Everything's switching to more efficient forms and EVs. And I look over at the key measure this year will be agriculture. This year, The Corn Belt. If the Corn Belt does not come out and produce a massive, biggest crop ever, I'd be surprised. You basically need a drought because we've had the best incentive in 10 years to produce, and we've had a major shift in technology moving higher. Also, one thing people are expecting is the dollar to continue to decline. The dollar is near the lower end of the range. It has been an upward trend for 10 years, and it's the key drivers that have been driving a strong dollar for 10 years are still in place, i.e. a strong U.S. stock market and weak and U.S. relatively high yields. So to me, everything is predicated on one key thing. The stock market has to keep rising. I've been pointing that out in everything I do is the correlations between commodities and the stock market is the highest ever, depending how you look at it. I use basically 10-year averages, 40 quarters, 120 months, going back to 1960s. So as long as the stock market keeps going up, commodities go up, but they're not driving. They're just catching up right now. So I'll end on this. Copper is near the highest level it's been in 10 years. It's just inching above that level. Imagine if we said something like that in the stock market, where we would be. It'd be major deflationary things. So I point out, to me, we're just following this printing of a lot of money. Bitcoin to me is a new commodity super cycle, and I expect a lot of supply elasticity to kick in most commodities, most notably crude oil and grains.
On that point, Narendra, despite obviously the great challenges that India is facing, the stock market in India is performing quite well through this period of stress.
Well, the stock market is performing very well. Look at, for instance, hard currency reserves, very, very impressive, doing extremely well. Foreign direct investment doing extremely well. Overall, India's image as an economic destination doing extremely well. And when you still come to India, people talk of COVID for 5 minutes, those who are in business, and after 5 minutes, they start talking about their future plans and investments and expansions and so on.
We have seen in Europe and the US where they've coexisted with COVID and the economy has continued to perform very well given the structure of the developed economy. Can India also deliver some of that value as well, that despite the COVID, they could coexist? You said much better this time than the first wave.
Oh, absolutely, absolutely. As I said that, as I said to you earlier in one of our conversations that, most Indians, whether you are a billionaire or you are a poor person, we look at life, including business life, a little bit more philosophically. So people are just looking at COVID-19 as a kind of warning from the nature, learn from it and move on and invest more, expand your business and, and go in the direction of making India a $5 trillion economy. So I think the focus, there is, of course, reports and all that, bit of anxiety, but there are no kind of major kind of setbacks in terms of how people look at business, how people look at India as a destination. India remains a fossil fuel economy. And and my own sense is India will remain a fossil fuels economy that's mainly diesel and coal for maybe another 15 to 17 years. And India will become the second largest importer, consumer of petroleum products in the coming few years. So that is very much on the line. Though I must mention here, since we are discussing, there is a little bit of I wouldn't say worry, but stress on those who look at India's economic future as a whole, and knowing that our dependence on fossil fuel, particularly diesel, is very, very high, or petrol is very, very high. These kind of theories we have heard emerging out of Washington, D.C., that America the Biden administration may let oil actually to go up to $100 per barrel so that more countries are forced to invest more in renewables. That and at the same time, it would also deal with a lot of other things. So we've heard this so-called conspiracy theory that the Biden administration wants oil at $100 per barrel. That makes economies like India extremely uncomfortable, knowing we are doing very well in renewables and we plan to push it further. But at the same time, oil, if it's more than $60 per barrel, that's not a very good news for us. And India is going to fight politically as hard as it can to make sure that oil remains within the kind of limits which are dictated by the market and not by some politicians.
We're just showing a survey question that we've been doing the last few days about whether we will have to do downward revisions on world economic growth. We did hear from Narendra earlier indicating that maybe India won't go 10% in the next year now, maybe it'll be 8.5, but still quite significant. Kate, before we go, let's go to the survey question, actually, before we run out of time to ask it. Can US-Europe reopening trump COVID-19 surge in Asia, South America, and push prices above 70 barrel this week? We are about 40 cents or so away from $70, but we haven't closed above $70 on Brent for 2 years. Is this the week in which that will happen? Holidays, the opening of the UK and Europe, will we pass through and close above 70 this week? Place your bets, so to speak. Kate, how does OPEC manage this equation now? We're a first month into a 3-month cycle of adding 700,000 barrels a day this month, and again, another similar amount next month. We're reaching sort of 5-year averages on global inventories. Is this an opportunity for OPEC to add more than they have announced in order to get some of those barrels back into the market?
Well, I mean, their trick has been to keep the market guessing, isn't it? I mean, they under the agreement that was reached in April last year, they're supposed to maintain production after after the cuts are tapered by July. They're supposed to maintain that level of production until April 22. So that gives you a bit of stability, but they can still spring a surprise. And I think a lot of it will depend on whether they actually do see this accelerated demand surge materialize in the second half, which the IEA and OPEC are predicting. And the IEA says there's no way that even the 3.8 million of additional supply that they expect to see, not just from OPEC Plus, but also from Brazil, from Canada, from the North Sea, is not going to be enough to meet that demand. Now, of course, it's all subject to revision because it does depend on India. I heard on one of your programs the other day, Sarah Akbar saying that some companies are being forced to declare force majeure because they just don't have the manpower. A lot of it, particularly in the Middle East, because flights are being suspended. So I think there's a lot of uncertainty, and even those forecasts are tinged with uncertainty. The recovery remains fragile. So I think, to go back to this price issue, I don't think any scenario that I've seen actually sees a very big spike in oil prices. You may have occasional ones. And of course, you do have the situation in the Middle East, which, given that there have now been, peace has been declared by the UAE and Bahrain, and there's less of a chance that it's going to become a sort of major Middle Eastern conflagration. In previous times, it would have had an impact on oil prices because of the rising tensions in the Middle East. So I think with Iran possibly coming back at some point, I mean, even if they don't reach agreement, you may see a gradual loosening of these energy sanctions. And of course, India is going to be quite important because there's a lot of competition for the Indian market. I mean, you see more US imports into India have trebled in recent months, while Saudi Arabia's have come down. And that's what Narendra was saying, that as prices go higher, they're sort of, there's a reluctance now to import from OPEC countries because they blame them for the price hike. So I think there's still a lot of uncertainty that is going to prevent prices from sort of really, really, going straying from this range too far.
Mike, just final thoughts on the question of where is the appetite in the body politic of America for more stimulus? The big infrastructure bill seems to be wandering along. There's a lot of growing political talk or shouting or whatever you want to call it around inflation, people not willing to go back to work because the welfare benefits are too great and so on. Where does that argument go and how does it impact policy, do you think, particularly further stimulus?
I think it's gonna lay low for a while as far as further stimulus. We need some kind of another catalyst to really kick in because Republicans are pushing back hard, and it's coincide with higher taxes. So I think we're good for now. The key catalyst would be if the stock market turns back down. The market, they'll come back and support it. So to me, it's going to lay low for a while. It's going to be the markets that'll determine that. Stock market going down. And the two key things my colleagues, Kate and Narendra, just pointed out, I think is the key thing, is one thing that higher oil prices do and now are doing is really incentivizing, accelerating the green revolution. But it would never be politically correct ever for a US president to suggest higher oil prices, because he only cares about votes in one country, and that's here. And there would be major backlash for that. So I think we're in a stage where the oil's sending into a really boring market. It's near the upper end of the range. Stimulus, yeah, we'll get it if the stock market tells us to. And that to me is part of the problem. And that it's completely dependent. So I just like look at M2 money supply, since everything's been so much liquidity in the system. You look at crude oil and versus M2 money, even gold versus M2 money supply, it's down since 2008. It's just crude oil is down the most. So it's just a question of how much more money you can pump in the system, and inflation is becoming an issue. But I think it's more transitory. I mean, people are getting sick of that word. It just it's really being supply elasticity is kicking in.
Let's get the survey result and give Narendra the last word. Yes, 62% are seeing the oil price pop above 70 this week, and 38% still playing on the no side. Narendra, what do you think we have to watch out for in India to have some sort of signal that this is going to be, we're going to get through this in the next month or two? What are you watching for real indicators?
Well, basically, you see that, we have certain states, and we are going to see that how they deal with COVID. Number two is that, the spread of coronavirus in the rural areas. That's we got to see that how various state governments at the local level are able to cope with it, deal with it, and get rid of it. Because the quality of governance in many, countryside areas may not be as good as, for instance, Mumbai or New Delhi or other urban,
Would we ever get any data on that? I mean, we know it's kind of happening, but there's really no data point to tell us the scale.
Well, we don't have the minute data, but we have a kind of data in terms of how, for instance, in terms of credit offtake, we are looking at purchase, we are looking at commodities, also local commodities, and also the basic products that people buy on day-to-day basis from the next door grocery shop. So we are watching those data very carefully. So we have a reasonably very good idea what's going on in the economic landscape. And as I said, that this time round, there are some bad stories, especially when it comes to the way things have gone a bit out of control in some parts of the country. But overall picture is now kind of looking much better. And I'm pretty confident that, and not only me, most economists, as far as the overall economic recovery is concerned, I think we are pretty much on the track. And by the time this year, we are closing this financial year, I think we're going to be, in terms of GDP, we're going to be almost very close to what, for instance, World Bank or IMF or other credible organizations have been predicting. Maybe 1.5% less than that, but very healthy nevertheless.
Well, as they say in this part of the world, inshallah. Narendra, thank you so much for joining us this morning from India. Mike from New York and Kate in London. Really appreciate your insights, really useful and timely given the week that's in it. Take care, everybody, and we'll catch up in the coming days. All the best.